Hello everybody. The title of this video is MSTR stock. We added 1.24 billion bitcoins worth of Bitcoin yesterday. Stretch just got started. That's the title of the video. Of course, my first video in 2 days. Sorry for the late video. I am back in the USA. Delta Airlines was not the best this time. Flying is great when it works, but when it doesn't work, it is not good. Anyways, I'm back in the USA, and I missed this whole celebration. Yesterday, I wasn't playing the whole celebration of Saylor. Unfortunately, I couldn't partake in the party because that was the biggest buy since July of 2025, 1.25 billion. Oh my goodness! I mean, if he keeps going up, we might get to 2 billion. That's a lot of Bitcoin. And if you look at the 8K, right? How was the Bitcoin bought? Let's look at the 8K. So you can see Stretch was 120 million, roughly, rounding it up, right? 120 million. And MSTR was 1.1, more than 1.1 billion. So still a major common stock ATM story. If you tell me it's a leverage play, I am still frowning my eyes at you because literally it's a MNAV monetization story 10x more than it is a debt story, right? There's 10 times more common equity issuance than there is Stretch. So things haven't changed. It's still mostly not a leverage story. I mean, to my despair, I want to see some leverage now, but we don't have it. And it's so weird that the FUD keeps telling it's leverage. No, it's not leverage. It's equity. There's two important things in this video that I want to highlight today. The first important thing, of course, is Stretch. So if you look at the past 5 days, granted, Monday of last week was not a good day for Stretch. Tuesday was a meh. It worked on Tuesday, and we were excited, of course, because it hadn't worked in a long time, but it was meh. And then you really had Wednesday, Thursday, and Friday last week where ATM'd like a madman, ATM like mad. So technically, we had 4 full days worth of Stretch. 1 day was a little weak, which was Tuesday. But in these 4 days, he was able to issue 119 million, so divided by 4, that's 29.75 million a day. So he's starting slow. He's starting at about 450 million a week. And as you know on this channel, I have said that I expect eventually him to ramp to 500 million a week. And maybe after a year from now, maybe in 2027 when we talk, he will be doing about 1 billion a week for Stretch. These are my expectations based on how successful he was the last time he did it, and how successfully he is again today. This is enormous. 120 million in 4 days. And really, it's more like 3 days. This is enormous. And then we have question number 2, which is why in the world is he still issuing the common? Well, why is he doing so much common share issuance? Well, first of all, I mean, there's 2 reasons. One of them is it's still accretive technically. I know people don't like it when I say that. And you know, depending on how you calculate MNAV, people are going to say, oh, you actually lost 5%, you actually lost 10%. Based on the way that Saylor calculate MNAVs, we are at 1.05. That means he's selling $1 for $1.05. That's a 5% yield, essentially, on that 1.1 billion. So it's still accretive, but it's weak. Like, it's not very good. It's still accretive, but it's not very good. So I have to believe it's not the main reason why he's doing the common stock. He's issuing the common stock, in my view, in order to get more capital to back Stretch. More capital to back Stretch, more capital and more permanent capital. Don't forget, common stock issuance creates permanent capital, more permanent capital on the balance sheet to back the debt that is about to be issued. And if you go on, of course, strategy.com, I think it's like the 5th or the 6th link. If you go on the BTC rating link on the debt, you can see, well, first of all, I mean, the safest debt in the world essentially is, no financial advice, but essentially the safest debt would be something like a Convert 2028, where you have 85.5 times more cash on the balance sheet in the form of Bitcoin. So you have 85 times more Bitcoin on the balance sheet backing that $1 billion worth of debt. Outstandingly safe debt backed by something tangible. Remember, this is the revolution of Saylor. Most debt is usually backed by cash flows, usually backed by future expectations. I always say AT&T, I think it's 260, maybe 250. It's more than 200 billion worth of debt at AT&T, backed by fiber. Yeah, backed by fiber. And of course, Starlink is never ever going to disrupt the internet. That's never going to happen. Right, that's the problem with cash flows. The problem with cash flows is that you issue 30-year debt based on future cash flows, but your cash flows with technology, they're not going to last 30 years. Your cash flows are going to get leapfrogged. Your technology is going to be obsolete, but the debt remains, and that's going to be very bad debt. That's going to become very bad debt. Saylor is going back to the early days of debt, when debt was backed by a tangible asset, debt was backed by gold. To borrow money, you needed to pledge the gold with a bank, right? And that's what Saylor is recreating with the preferreds. The preferreds are issued against money in the bank at Strategy, that Strategy already owns, against Bitcoin. And that's the beauty of the BTC rating. The BTC rating is how much Bitcoin is backing how much money was issued. And you can see for Stretch, we had $3 billion worth of Stretch that was issued, and the BTC rating is 6.1 times. So there's 6.1 times Bitcoin backing the debt. The debt is backed 6 to 1. For every dollar that he owes, there is $6 of debt backing it. And you can see all of these preferreds, they look really, really good. As he always compares it for Apple, for example, it's very, very rare in the real world to find even the best debt to have more than, say, 2x worth of backing. These all have a 6x worth of backing. But here's the thing. When he issues more common to add more permanent Bitcoin to the balance sheet, all of these BTC ratings increase. And the more these BTC ratings increase, the higher the value of the debt, the higher the safety of that debt. And safer debt is worth more money than unsafe debt. Debt that is backed by more cash on the balance sheet is worth more money than debt that is backed with less cash on the balance sheet, or even worse, debt that is backed by cash flow. And let's say there is an opinion in the market that the company who issued the debt is going to go bankrupt. Well, all of a sudden, your cash flows are not even that good. They're not even that great. And let's even consider the fact, 2028 is coming up not too far away from now, is it, right? Crazy to think it's in 2 years. But let's say in the next 3 to 4 years, all of these debts, in the next 3 to 5, I suppose, in the next 3 to 5 years, all of these debts are going to equitize. And when they equitize, that means we issue new shares to pay off those debts, right? So it becomes permanent capital. When it becomes permanent capital, it's not debt anymore, which means that all of the Bitcoin backing this debt is going to be backing the preferred. So we're going to have two events that make the preferreds safer. A, the continued issuance of common equity by Saylor to raise permanent capital, and B, the equitization of the converts. Expect the equitization of the converts. Expect this to be a catalyst every year from 28 to 32. So that's the point. And I think he's issuing the common stock because he wants to increase the BTC rating. He wants to increase the safety on all of the preferreds, but especially he wants to increase the safety of Stretch. That's why he's doing it. That's why I love it very much. I think it's still a good move, to be issuing common equity, even though it's a 1.05. You're selling $1 for $1.05. That doesn't sound too good. But otherwise, if you think long term, to me, this is a bullish development. And I'm not the only one who thinks it's a bullish development. If you look at the price performance of Strategy yesterday, we rebounded 3% versus 1.39%. Remember, we're supposed to be 1.5 times Bitcoin. We were more than 2 times Bitcoin yesterday, so that did pretty good. And Bitcoin is still, holding on to its stable coin-like behavior. We've been stuck in the low 90s for weeks now, and we were stuck in the mid 80s before, and eventually it will rebound. You just can't predict when. It's impossible to predict when. Whales are accumulating, institutions are accumulating, BlackRock, Vanguard, JP Morgan, Bank of America, advising their clients to buy Bitcoin. People are in an accumulation phase. In my view, Bitcoin is very bullish going into 2026. It's very bullish. I cannot explain the lag rationally. And so if I can't explain the lag of Bitcoin rationally with, say, the QQQ and with, say, the precious metals, That means to me there is still a lot of price suppression for Bitcoin. That's why Saylor is likely salivating. That's why Saylor is likely happy to see this common ATM issued. So, anyways, as always, this was not investment advice. This is not financial advice. This is only entertainment. Please like, please subscribe, follow me on Patreon, follow me on X, and see you tomorrow for a regular schedule of videos. Again, once a day is what I try to stick to. No investment advice. Thanks for watching. Have a wonderful, wonderful day.